welcome. You are here at the Black Wealth Experience, and we're at the blackwealthexperience.org. Today, we're definitely talking about an event that's coming up on Juneteenth, and on Juneteenth, the actual day, which is June 19th, on a Monday, we're going from 5:30 to 7:30, and we are going to do a Black Wealth Housing Summit. We're going to talk about all things housing because we want to know whose mortgage are you paying. And hopefully, we want to put a team together for you. And so the goal is that you would have a real estate agent, that you would have somebody that's involved in financing, that you would have, a loan officer, that you would have maybe a credit person if you need it, that you would have an insurgent agent. And we're going to put these teams together for you so that you now have the ability to be able to have home ownership. Because what we believe is, financial or wealth starts with home ownership. When we think about generational wealth, it starts with home ownership. Personal wealth, it starts with home ownership. Now, is it possible to not own a home and be very wealthy? I'm sure there's a whole bunch of people in this world that, in fact, I don't know any people in this world that are super rich and don't own anything, whether they're living in it or not. But even at the point where you think of like super wealthy rappers, or you thinking about entertainers, or you think about football players, they buy mom a house or they buy themselves a house in the process because it's one of those stepping stones. So we want you to show up on that day. I want you to watch all of these podcasts that we're having. We just had a really good one of somebody who just bought a house. So make sure you look up that. A grandma who just bought her first house. And so I want you to make sure you look up that and see that. But today, we're going to talk about taxes, everybody's favorite subject. And I have Jazmyne Hunters. She's what we call an enrolled agent, which allows her to represent folks and taxpayers, I guess. I guess if you're not a taxpayer, she can't really represent you. Or maybe if you haven't been paying your taxes, you're going to have her represent you here pretty quick, especially if you're making money in this country, right? But she can represent you to the IRS. She came when she was a little kid from Detroit, but she's a Colorado person, so she's been here for a while. Went to high school here and just been doing some phenomenal stuff in the community. So one of the things in home ownership, one of the things as a lender, so I'm a lender and I continue, please call me if you're needing to get a loan. But one of the things that we ask for is tax returns. And there's a reason we're asking for tax returns. Sometimes we're going to ask for your W-2 statements and that's well, but your tax returns tell a different story. And they tell a story about where you're at financially, maybe to a greater detail than what two paycheck stubs can actually do. And so I've asked Jazmyne to come on to really kind of talk about and dive into taxes and what we need to kind of look for and some things that we need to make sure that we have that are in place. And especially when you jump into self-employed. And I know some people here that are probably listening to this have your own businesses, or you have what we call the side hustle, right? So the side hustle is something that many of us have, continue to have. I think I have 8 or 9 different streams of income that are coming in. So I want to make sure that we're doing our taxes right so that it can, expand to being able to buy homes or being able for you to be a first-time home buyer. So, Jazz, thank you for being on. I am excited to hear from you today. Some things that I'm going to be taking copious notes as we do this. So maybe you can kind of first just talk about how can somebody get a hold of you, because I want to make sure if they need you, they can get a hold of you, where they get a hold of you, how they get a hold of you. And then maybe after that, just kind of tell us your story, how you got into what you do. And then we'll go into some tips and stuff right after that. But yeah, please tell us, how do we get a hold of you, Jazmyne?
Thanks for having me, Brian. So you're gonna get in touch with me. I'm available on all social medias at jhuntermba.com. You can also visit my website. It's jhuntermba.com. So I'm jhunter everywhere. The business name is actually Hunter Virtual Bookkeeping and Tax.
All right. Well, that sounds good. So when we talk about like, how did you get involved in this whole tax world? What inspired you? I've talked to a few people who work for the IRS, and I've talked to people that are accountants and stuff, and that's not who I am at all. I'm not a numbers cruncher, although I do mortgages. I understand numbers, but I'm not a detailed, you wouldn't want me doing your tax return. So how did you get involved in all this?
I have always loved taxes, all the way back from when I was a W-2 employee myself, working at the hospital. I couldn't figure out why I wasn't getting any money back. So I started doing my own taxes, doing my family's taxes, my friends' taxes. And then eventually I went on to work at the Colorado Department of Revenue, actually in the non-filer section. where we go through and kind of scrub your IRS record and see if you should have income that you're claiming to Colorado and you're not.
Oh my
um,
gosh. Did they have windows where you were at? Is that like in a basement somewhere? Oh my gosh. Did you enjoy that? Okay.
I did. I mean, I loved it because it's like a puzzle. You're just looking through things and trying to fit the pieces together. What really hurt, though, was seeing people who look like us coming into the office, not understanding, so sad and distraught, and just, at their wits' end. They were led down the wrong path by maybe a tax preparer who wasn't credentialed, by doing it themselves, even by buying some over the counter software, because people don't understand software is limited to what information you put into it.
Mhm.
So if you're telling it the wrong thing, it's not going to take you down the right street, just like Google Maps.
Yeah.
Um, so I tried to help as many people as I could, but of course you're limited because that's my job is to get the state money, and it's not necessarily to help you save a dollar.
But that's not your job anymore, right? So your job is not to get the state more money.
Absolutely.
So now you're into helping people be able to do stuff. All right. Well, that is awesome. So when we talk about mortgages or real estate or first time home buyers, we're looking to how do we make sure that we can get somebody into a home. What are some suggestions that you would make on a tax return, or obviously without seeing it you can't, and you can't make exact, but some generalized things that you could tell somebody to prepare for, because one of the things we do ask for when somebody's doing a loan is we do ask for usually 2 years of tax returns, right up front. If somebody doesn't have that or hasn't been filing, what are some of the advice things that you could give people?
My biggest piece of advice to everybody is to always file. No matter what. Even if you're someone who like, oh, I don't make that much, I make under the standard deduction, always file. There are several reasons for that. One, identity theft is on the rise. It is rampant. It is the only way to protect yourself from somebody else claiming your social security number and filing the fraudulent return. Is if you do it first, you're going to keep them from doing that. The
Okay.
second thing is you're going to start the clock so that the IRS or the state of Colorado can't go scrubbing through your records looking to see if maybe you should be filing. If you don't start the clock, there's no statute of limitations. It can go on forever. They can come get you from the 90s.
Oh,
Like,
wow. Okay. I didn't know that.
yeah, there's no clock. They only have 3 years if you file a return to make any changes. So go ahead and file your return, start that clock. Maybe they won't catch if you made a mistake, and you kind of prevent yourself from that, nefarious no window.
Okay.
And if you're a business owner, make sure that you are actually staying on top of all of your finances. Don't wait to the last minute to look for a tax preparer or an accountant, a bookkeeper to try and get your books together in April.
Okay.
It has taken me months to go back and have to do a whole year's worth of accounting for somebody in order to get them ready in time to meet the filing deadline. So make sure that you're staying on top of it. Maybe set aside 30 minutes every day and do your accounting so that at least by the end of the year, even if you don't have an accountant or bookkeeper, you can get your tax professional all the information that they need to file an accurate return. An accurate return is the most important thing for you because you want to show just what you earned, just what you spent, nothing more, nothing less.
Gotcha. So when we talk about bookkeepers, I know there's several businesses and they think it's one of the hardest things to keep track of like you said, 30 minutes a day. I don't have 30 minutes a day that I can spend on doing books and stuff, nor do I want to take 30 minutes a day. However, what in the world of bookkeepers, there's like different levels, right? I mean, I have like QuickBooks or whatever, but it's great that I have, like you said, a piece of software, but it's only as good as what I input into it. And if I'm not spending time inputting into it, it's not good at all. And so what is your advice on, you know, affordability of a bookkeeper or levels of a bookkeeper or what to look for in a bookkeeper? I think you've already talked about why it's necessary, but what are your recommendations on that?
I think that what you should be looking for is someone that matches you. Like, I know we all go into it, like, we don't want to spend too much on the bookkeeper. The software is already, I think the cheapest one is $30 for QuickBooks. And it does nothing. Like, it kind of you have to do your stuff. And so when people come in and they're like, I only want to spend $150 a month for a bookkeeper, they don't realize that that still requires you to do everything. All they do at the end of the month is make your financial statements for $150.
Okay.
I have taken over other clients who pay upwards of $500 a month, and their accountant, their CPA, only did their end of month statement. So they were expected to do everything and then just be ready at the end of the month to get their statement.
Okay.
So if you're not willing to put the time in to actually categorize your expenses properly, make sure that every single transaction in and out of your account is listed correctly and going into the right bucket, your CPA at the end of the month, you're wasting your money on your accountant, your bookkeeper. And a lot of people fail to realize or don't look at the engagement agreements when they go into that relationship that maybe they're not going to do that. I come from the position where I believe that my clients need me to actually do that categorization for them because I respect you're running a business. You don't have time for this.
Mm-hmm.
You don't have 30 minutes a day. You know, you got loans to process, you got houses to show, you have stuff to do, you have kids to take care of. Why are you wasting your time? And then still paying me $500 a month. Just let me do it all. I know it'll be done correctly.
Gotcha.
And then we can get everything out at the end of the month. So yeah, there are different levels. A bookkeeper should be doing your categorizing. They should be entering everything in and getting it ready for your accountant at the end of the month. If they don't do that service, where they issue your financial statements from which you can make great business decisions.
Gotcha.
At the end of the year, your accountant or tax professional is going to then file your return for you. So sometimes those are three different people. Me, I do everything because I just don't trust that anybody else is going to do it properly.
All right. Oh, okay.
So I'll do it all.
Nice. Well, and I can see that being very helpful. So now back to our person who is now wanting to buy a house. What are some things that they should do? When they file their tax. I mean, for a lot of us, I don't know if they just do the 1040 easier, but itemization is absolutely going to happen after they get their house. Are there some things that they should do before or as they're preparing to get a house to make sure that all their books are straight? What's your advice on, they got to turn in stuff to the lender? What are some ways that can help somebody prepare for some of that stuff? Because they're not going to get a bookkeeper that's going to, help them go to King Supers or, get their groceries and that kind of stuff. But they got to keep track of where their money's going, right?
Yeah, for sure. I think it's a great thing to reach out and know exactly how much income you need to show from your lender so that your business accountant knows exactly how much you guys should be aiming to deduct at the end of the year. Lots of business owners go into accounting thinking I need to show 100% of my deductions so that I pay zero in taxes. But then they don't realize that you're not reflecting any income. You can't leverage anything. Like you make no money. You can't buy a car. You can't buy a house. You can't buy nothing.
Yeah.
So you're going to have to realize some income for your business. Maybe that means not taking that Section 179 loss and claiming 100% of your vehicle this first year because now you have no income. Maybe you spread that out over time. That's something that tax planning can do for you. And so that you're allowing yourself additional expenses over time and you're not using it all up front.
Okay. Do you have the ability to like, if somebody were to call you and set up and to be able to say, okay, if you were to, this is how much you paid on tax, like somebody you prepared tax for, you live in an apartment, this is how much you're saving and, on taxes and, whatever you're paying every year, because I think a lot of people have it in their W-2 income, and so they're not really seeing and they're excited about getting this deduction at the end of the year. Can you look at that and say, okay, but if you were to buy this house here, this is how much you would be able to deduct and save? Are you able to do that prior to them buying a house, or if they give you some numbers, to kind of help them find what it would be like?
Yeah, absolutely. It's all part of tax planning. I do sell custom tax plans. One thing that I have noticed that even my clients who do have homes haven't been itemizing. With that Tax Cuts and Jobs Act, it raised the standard deduction so much that claiming the property tax and your mortgage interest isn't enough to overcome what you get in standard deduction. So lots of people haven't been itemizing and claiming those things anymore.
Oh, okay. So that would be something that they definitely need to call you to talk to you about and how to do that. I just start thinking about all these different ways that sometimes I think it's the IRS gets us, because we don't know, and without
Mm-hmm.
calling somebody, we have like auntie over here or somebody else preparing for us. What would you say about the importance of it finding, or how do you find a good tax preparer, for the person who doesn't have a business, but what do you look for when you're trying to find that person?
I definitely look, I am a part of a match. So I go with people who make me feel good.
Okay.
It's like I want people who make me feel heard, who make me feel seen, and who care about my bottom line. If
Hmm.
I can't see you actually helping me, and the only reason we're getting into business is because of your bottom dollar, I won't do business with you.
Okay.
So I've seen people with credentials, which usually you would say, "Oh, I want someone with a credential." I've seen people with credentials mess up people's returns. I
Hmm.
have heard horror stories about CPAs getting their clients locked up for not filing their returns or claiming credits that they weren't due, and now they're subject to tax fraud, jail, and repayment of whatever that stuff is, plus penalty and interest.
Wow. Yeah, we don't want that. We don't want to go to jail. Good. So I guess as I'm thinking of the whole financial planning and stuff, what we're trying to do with at the Wealth House and Wealth Summit is, put somebody with a real estate agent. They're the expert in finding you the home that you want to be in based on what you can afford. Then we have the loan officer, which is somebody like me who says, okay, this is what you can afford. You've given me all this information. And then we have like a credit person because sometimes folks have not done a good job of paying their debt off or whatever it is that they need to do, and that needs to be adjusted. And sometimes they just make mistakes that need to be corrected. And then we have the insurance person, so that we're making sure that all the insurances are right. I had a person that I was talking to, and their insurance was really high. I don't know, like $400 a month, which seems really high. And I'm trying to figure out why is it so high, but realized that there's been 3 claims made, in the last 3 years, which is sad because one was like a roof because of hail damage. The garage door broke down, and then one other
Mhm.
thing, and then they've raised her insurance. So how do we help them find another insurance? So that's important. But probably one of the most important is on this, financial planning side and tax side, and how do we make sure that we have the right income showing to get the right house to be able to do that. And so it's so important to find that right person because we're all experts in these areas, and this team needs to come together because the goal is how are we going to get people into more homes? How are we going to do this? And so, Lenny, who's got plenty on the corner, probably shouldn't be doing your taxes for you because they're just not appropriate, or they don't have the education like you do. You've been doing this a long time and understand how to do it. Um, just your advice on picking, for somebody who's getting ready to buy a house. Would you encourage somebody to have somebody kind of just look over their financial picture, their tax picture before they even start with the lender, or what would your thought process in conjunction with the lender? What would you um, encourage people to do?
I would definitely say in conjunction with your
Okay.
lender, because you need to know, where your professional needs to know how much income we're trying to claim. Because if they're coming in off of your goal of zero, then that's a way different picture than it's going to help you get a house. Um, so your strategy could change year to year. I definitely would also say the IRS website is a great place to actually find professionals in your area, and people who service you. They also list the people who've had sanctions against them. So tax professionals who people have reported and told
Okay.
on,
Did not know that.
they're on the website too.
Wow. Okay. I did not know that at all, that you could go on the site and find, those different professionals that you could use. Um, Big question that comes to me all the time, and I never know how to answer it, is when, like, I just fill out a W-2 and I'm trying to figure out how do I figure out how much or how to deduct because the form has changed so much
Mhm.
and it just says use this little calculator that they give you on page 2 or 3, and that should tell you how many deductions you're going to take. but it doesn't make any sense to me because it used to be you could, I would claim, I had my kids and I would claim myself and my kids and I'd just say 5 and then we were done. Your advice on just figuring out that piece, is there an easy way to have somebody help you do that, or is it just guess?
No, don't guess. Um, what a couple of things. So they on the IRS website, they also have the calculator. It's a little more interactive, so you can kind of click more buttons and it kind of goes back and forth. There's a slider tool that allows you to adjust how much refund you actually want on there. So you can adjust your withholding based on how much refund you want to get at the end of the year.
Gotcha.
Um, Also, after you submit your W 4 to your employer, keep an eye on your check because lots of times they don't even listen. They may override what you wrote on your W 4 because they feel like you wrote it wrong. And sometimes they don't withhold. I actually worked for a company who was in taxes themselves, and they weren't even withholding for Colorado State. But I have worked for Colorado State, and so I know what to look for. And I'm like, excuse me, I am not a party to this. You're not withholding Colorado taxes.
Yeah, well, and I think about that and go like, I don't know who FICA is or all the these people. Like, what I can look at my check, but I don't know how. Is there like a way to go back to that site and say they're withholding the right amount? I mean, how would I even know what I'm looking at to figure out if, because I want to do that. I haven't looked at.
Mm-hmm.
I should probably look at my WGX, but and I'm different because of the way I get commissions. I'll get a whole bunch of money, for closing a deal at one time, and then maybe the next week I didn't close a deal, so I don't get a check that week. And so they it seems like they take out based on what that check is, as if I make that for all 52 weeks of the year. And so I'm so lost on how to even calculate that, but that's where I would come to a professional like you, right?
Yeah, for sure. And that's accurate. It actually does adjust your withholding. So if you do get a huge commission check, now they just assume, oh, you're going to be making this much now. So you're in a higher bracket and it's going to adjust your withholding accordingly. So you definitely want to make sure you go back and make sure that it's changed back so that your withholding isn't too much.
Gotcha. And how often can you change that? Can you change that before every pay period if you wanted to? If the employer, it's allowed by the government, maybe your employer's like, I'm not going to do it. Or are they required to do it if you ask?
See, and that's the thing is the thing with employers. Can you trust that your employer is actually putting your W-4 in correctly and withholding the right amount?
All right. Well, perfect. Well, Jazmyne, this has been a great conversation. I'm going to have you back again as we get forward. And the Wealth Housing Summit is on June 19th we're going to be at Cross Purpose, which is on the corner of Martin Luther King and Colorado Boulevard. They kind of share the parking lot with the AME Church there, and so that's where we're going to be from 5:30 to 7:30. We're going to have professionals that are there to help folks. We're going to match you up if you already have a real estate agent. When you go to the website, which is the blackwealthexperience.org, it says RSVP. You can actually write in your real estate agent or your loan officer. We don't want to take those people away. But if you don't have those folks and you have questions, we want to make sure those get answered. So when you walk out of there, you have a plan. And so I want you to give your information again and how to get a hold of you, what to look for. You don't have to say what to look for, just how to get a hold of you if they have questions. And then we'll look for, hopefully you can be there or have some representative that's at our summit. And then we have more opportunity to talk. And as questions come up, believe me, I'm going to ask you, and then we're going to have you back on and we're going to answer some of these questions that plague us all because we don't understand this behemoth called our government that takes our money, for living here and working here and that kind of stuff, and how we can best interact with it. So maybe we can just do a show on, not how to beat the IRS, but how to organize yourself in a way that actually helps you. So we'll continue this conversation. So how do they get a hold of you?
Yeah, I would definitely love to be back to actually share some credits and things that people could take advantage of that would really be helpful for them when buying. So if you want to get in touch with me, you can email me hello@jhuntermba.com. I'm on Instagram and Facebook at jhuntermba, or you can see me at my website, jhuntermba.com.
All right. So before you go, since you just intrigued us and you left us with that hanger, give us at least one way that we can get a credit that will help us.
So Colorado actually wants to encourage home buyers. So they have this nice credit. It's actually a first time home buyer savings account interest deduction. So we all should have our money that we're saving to buy our house in an account. You're supposed to report income, right? And be taxed on interest. You can actually deduct that from your Colorado state return and not have to pay tax on that income.
Oh, all right. So that works. I
Yep.
like that. Okay. Anything else that you got that we could love to know about
Yep.
how to help us buy a house? Or
Yeah.
get some more information?
One other one that I think of. So if we're actually trying to show income on our federal return, a
Mhm.
great place to save on that and maybe take more credits is on our state return. So if you have children, you're saving for their futures. Maybe they want to go to a Pickens Tech, a trade
Mhm.
school, to college. Start putting money into their 529, their college invest account. You can actually deduct $20,000 if you're single per beneficiary. So that could be for yourself, for your child. If you're married, it's $30,000. So I have three of my own children here at home. That's $90,000 that my husband and I could deduct off our Colorado return.
Wow. Okay. That's huge. All right.
And
All
that's
right.
every year. It's not, it's contribution every year. It's not just
Every
a
year.
one time thing. So you make the contributions, deduct it from your state income.
Okay. So and I'm going to ask you this, and I know we're good on time, but got a few more minutes. But on our mortgage deduction, so you own a home now, you
Yep.
get in there. How does that work? How does that whole process of deducting? Is it just the interest? I think people get confused on how much they can actually deduct
Yeah.
for their mortgage, and I think it changes too, doesn't it? Often.
It does. So they changed the law. Once upon a time, we were able to actually include our home mortgage insurance, and now we can't. We can't
Okay.
deduct that anymore, unfortunately. You can include the interest that you pay on your mortgage, and you can also deduct your property taxes. However, the tax section is now capped at $10,000, so you can't deduct more than $10,000. So if you got one house, two house, you can deduct the property tax on both of those, all the local tax you pay. So in Denver, that's a lot. All that is on there,
Mhm.
but you're capped at 10,000, which is why people haven't been meeting that standard on the itemized deduction and instead have to do the standard because you still have to come up with, for an individual, it's 13,850 this next year. Where are you going to find $13,000? Your property tax might be four or five. Interest is probably going to be a couple. You still need more money. Like we need another few $1,000s to be able to itemize.
Okay, gotcha. And I know you brought up mortgage insurance, which, I hate mortgage insurance because I think it doesn't do anything for the consumer.
No.
It is absolutely 100% for the bank to make sure if you do foreclose that they get their money back. And now you're saying that you can't even deduct it. So, we definitely, as part of the conversation, let's talk about ways to eliminate mortgage insurance because it's not a beneficial to the consumer. It's beneficial to the bank and our world of banking and folks, but it's definitely not beneficial to the consumer. And it's not even something like you just brought up that's tax deductible. But we
Yeah.
are going to do the interest on our mortgages, and we are going to do what did you say? The interest? Oh, the property taxes,
Property
which
tax.
in Denver and in Arapahoe County and Adams County, they're a little bit different, but they're still property taxes.
Mm-hmm.
They can all be deducted. Okay,
Yes. Mm-hmm.
perfect. All right, so now we got some of those extra gems. I appreciate it. Thank you for being on today. Again, if you get an opportunity to come out to the Black Wealth Housing Summit, which is on June 19th, it'll be from 5:30 to 7:30. We're going to get you dinner too. So we're not even going to charge you for it, but we want you to be there because we want you to experience home ownership. So thank you so much. I enjoyed having you on today. And like I said, we're going to have you come back. We'll talk with everybody soon.